Welcome to the Daily Update Podcast, where I'll go over the action in the market for Wednesday, July 23rd, and we'll see how things look for Thursday, July 24th. On Wednesday, the U.S. stock market delivered a strong performance, with both the Nasdaq and S&P 500 reaching new all-time highs. The S&P 500 climbed 0.78% on above-average volume, closing at its intraday high above 6350. However, the Nasdaq 100 lagged, failing to set a new all-time high and encountering some overhead resistance. This divergence raises questions about the market's underlying strength. The rally was fueled by optimism surrounding the new trade deal announcements with Japan, Indonesia, and the Philippines, which lifted Asian and European markets and carried over into the U.S. session. Notably, Japan's deal includes a 15% tariff on imports, down from the proposed 30%, and a commitment to invest $550 billion in the U.S., alongside opening its markets to America for rice and auto imports. A similar agreement with the EU is reportedly close to completion, further boosting market sentiment. Under the surface, there was broader participation, with small and mid-cap stocks performing well, though they're not yet in a confirmed uptrend. Growth stocks edged out value stocks, but value is showing signs of gaining favor, suggesting a potential shift in market dynamics. However, semiconductors, a key component of the tech sector, underperformed, which tempered the growth story. Market sentiment is back to extreme levels, registering at 76 on the sentiment gauge, above the cautionary threshold of 75. While this reflects optimism, it also signals potential overbought conditions. Momentum indicators are mixed. Short-term signals, including the Stochk RSI and Williams %R, show strength, but other momentum oscillators, including the MACD and slope oscillator, are drifting lower, hinting at possible exhaustion. Interest rates ticked up to 4.39%, but remain below the critical 4.5% level, and a weakening U.S. dollar continues to support equities. On the economic front, existing home sales disappointed, dropping 2.7% month over month to a seasonally adjusted rate of 3.93 million, below the expected 4 million. Meanwhile, the MBA Mortgage Applications Index rose 0.8% this week, with the Purchase Index up 3.5%, signaling some resilience in housing demand despite rising interest rates and high home prices. Sector performance shows that healthcare led the pack, an unusual standout on an all-time high day for the S&P, while utilities were the only sector to close lower. Financials and industrials showed signs of internal weakness, with their bullish percent indexes crossing below key levels. These are early warning signs, though they could reverse and turn back positive quickly. Individual stock highlights include Nvidia and Tesla, which saw mixed results in their after-hours trading once they reported earnings. The broader market's advance was encouraging, with more S&P 500 stocks actually participating, as evidenced by the equal weight S&P slightly outperforming the cap-weighted index. Looking ahead to Thursday, July 24th, several key data points are on the horizon. Initial jobless claims and continuing claims will provide insight into the labor market, while new home sales and global manufacturing and services PMIs will offer a broader economic perspective. For the PMIs, readings above 50 indicate expansion, while below 50 readings signal contraction. Seasonality data presents a mixed picture. The S&P is neutral to positive, the Nasdaq is neutral to negative, and the Dow leans negative for July 24th. This is also the week after options expiration, which historically tends to be weaker. The Carson seasonality chart reinforces the second half of July underperforming the first half of July. Potential risks include weakening momentum oscillators, a negative long-term sell signal from the Zohorchak method, and the Nasdaq 100's relative underperformance. On the positive side, the smart money indicators are all positive, and the advanced decline lines confirm the broad-based market participation by hitting new all-time highs. Trade deal developments and geopolitical events could also sway sentiment. In conclusion, the S&P 500 remains in a strong upward trend across all time frames, with all-time highs reflecting robust optimism. However, elevated sentiment, mixed momentum, and sector-specific weakness warrant caution. As we navigate earnings season and monitor upcoming economic data, the market's direction will hinge upon whether broad participation and trade-driven optimism can outweigh signs of fatigue. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.